Okay, so we are going to get into the computer so that you guys have some slides so you guys can see the whole entire thing, rather than just having me monologue, because this is going to be a very in-depth, well, not in-depth, it's more like general overview, again, mostly for the buying purchase, how much it's going to cost to purchase a house over in San Jose, California, and these rules are going to apply throughout the entire Bay Area, so definitely keep that in mind. So without further ado, let's go ahead and jump into the computer.
Okay, what's going on, everyone? Today I'm going to be talking about the purchase of a house in San Jose, California, but basically these rules apply throughout the entire Bay Area. And if you guys are just curious about the whole entire buying process and how much it costs, this video is going to be perfect for you guys. So the document requirements, these are only required if you are purchasing with a mortgage. Before you apply for a mortgage, these are the things you're going to need. The credit score, I put that as number one. I'll explain in a little bit. And the credit application fee. You're going to need your government ID, your social security number, your ITIN. You need a seasoned down payment, closing cost estimations, income and employment verification letter, 2 years worth of tax documents, so your W-2, your K-1s, and 2 most recent pay stubs. Let's go ahead and jump into it. So I put credit score as the first one because let's say you're thinking about applying for a mortgage and you haven't done these steps to build credit yet, then these are some pretty good advice that I got from other lenders. They said you should open up a minimum of 3 credit cards and then keep them open for 2 years and use them on a monthly basis. So basically for credit card number 1, you use it for gas only, credit card number 2 for groceries only, and credit card number 3, you might want to use it for auto pay, but at the same time, you do want to pay off all of these credits to hit the zero balance. So we're also going to talk about the requirements for down payments. So let's say 3.5% down with the FHA, which is the Federal Housing Administration. They typically need 580 for the credit score. The 0% down, that one only applies to VA, so the veterans. You guys would have to talk to your liaison about that. The 20% down is a conventional, which is a high. You want your credit score as high as possible. 25% down, same thing. You want it as high as possible. And the 25% down is for investment properties. So these are the charts. What is bad, poor, fair, good, or excellent credit? If you have bad credit, it's not impossible for you to apply for a mortgage. It might just be unfavorable terms. So I would talk to a lender to see what you guys can do about that. The other requirement, the government issued IDs. So they basically just want to verify that you are an actual person. So a driver's license, all of these need to be non-expired, by the way. The driver's license, the real ID, the passport, military ID, Department of Defense ID. I put etc. because I'm not sure what other IDs are out there, but basically anything that's government issued. So what the lenders are going to do is they're just going to make a copy of the ID and then give it back to you. For the social security, they're not going to make a copy, but I believe, talk to your lender about that. I've talked to lenders and they told me that all you really need is just the social security number to start the process. So if you have the card ready, just have it as a backup just in case if they actually need it. So if your lender does require it, then just have it ready. Same thing for your ITIN. Down payment, mortgage, math. This is just based off of the $1 million purchase price. This is the super simplified version. All you need is just 3.5% down is $35,000, 20% down is $200,000, and 25% down is $250,000. And then I'm going to talk about what type of mortgages are these. The 0% is for the VA loans. And if you are in this category, please talk to your VA liaison. They should be able to help you out with that because I think you get entitlement as well to help you with your down payment. So 3.5% is for the Federal Housing Administration loan. They do require mortgage insurance. So as far as the math goes, I think that's, depending on how much, it could be anywhere between an extra $200 a month, but it really depends. We have to actually, go in depth with that one. So once you apply for the mortgage, we can try to figure out the mortgage insurance for you there, plus the upfront mortgage insurance premiums as well. So, just call in and then we'll see what we can do. For the primary residential, again, that's for the conventional loan. That's the 20% down. And the conventional, it could be, you can also apply for jumbo loans. You can apply for conforming, non-conforming. This is just basically the 20% down to avoid mortgage insurance and to basically pay less interest. 25% is typically for investment properties or secondary homes. So if you are, a few states away and you want to purchase a house somewhere else, 25% down is going to be the requirement. So lender charges and cost. Lenders charge based off of the loan amount. and not off of the purchase price. For example, if you put a down payment of 20%, $200,000, then that means that you've already paid off $200,000 of the $1 million that you had to purchase for, and you're only borrowing $800,000. And typically what they charge is 1% of the loan, which is $8,000 if we're using this example. And all of these terms and terminologies that the lenders use, 1 point or 1% or 100 basis points or discount point, these are all basically 1%. But now discount points are different. You're paying an extra 1% in order to get a favorable interest rate. So income and VOE, which is verification of employment. So income, basically we just need your 2 most recent pay stubs if you are getting paid bi-weekly, or 4 of your most recent pay stubs if you're getting paid weekly. But if you're getting paid monthly, this part isn't on here. If you're getting paid monthly as a salary, we're going to need 2 of your monthly payments. So let's say, for example, you got paid on February, and in January, we need both of those. Even though it's not technically 1 month's worth, it's 2 most recent pay stubs. And a letter of verification of employment. Your lender should be able to provide you with that letter so you can send it over to your employment. 2-year tax documents. Now, these are going to apply to 3 different types of people. We do need 2 of your most recent tax documents for W-2. Let's say, for example, you applied in 2022. We're going to need 2020 and 2021. But if you filed a little bit earlier for 2022, then we're going to need 2021 and 2022. So your 2 most recent tax documents. Self-employment or 1099, same requirements as W-2, but you might have to give a profit and loss statement or more. And K-1 business owners, same thing, but both 1099s and K-1s should have your own CPA ready to provide any documents that the lender may need. And again, this is what real estate agents are here for. We are here to help you with all of these documents. Agents can only go as far as you can, so we just try to keep you on track. And if you need someone to assist you with that, you can definitely call me up. Examples of closing costs for buyers. So number 1 and number 18 is going to be intertwined. So I just put the percentage and then the actual number in a different slot. I should have just put it into one, but basically 5 to 6% is commission of the purchase price. Basically the broker fee, which is about $60,000 if we're going with $1 million purchase price. Title insurance in San Jose is typically 0.27% of the purchase price. That's to protect you under the title. City transfer tax is split between you and the seller. So buyer and seller is going to split 50-50. That's the typical thing that we do over here. Property tax equals 1.3%. The credit report fee is $27 I put there, but it really depends on the lender because they might charge a little bit more. Definitely check up with the different type of lenders and see how much they're charging. The credit report fee is pretty small compared to huge amounts that we're going to be paying overall. Yeah, that's something to be considered because that's the very first start. The credit report fee is probably the one thing that you're paying first than anything else. And origination fee is typically 1% of the loan, depending on the lender, depending on what type of product it is, but just expect 1%. And before, it used to be ridiculous. Like you could charge a lot, but now it's just 1% of the origination fee. We're going with the $1 million purchase price as an example, $800,000 loan. So we're going with $8,000 as the origination fee. Typically lenders require you to have an appraisal. And so the appraisal is to see the actual value of the house, where they send an in-person appraiser to check the house, inspect it, see the actual damages, to check if, the house is structurally sound. If they find something that's like hundreds of thousands of dollars worth of damages inside of the house, and they're going to report that. And then the lender is going to recalculate or reassess the house value from the purchase price. The appraisal fee is required for a mortgage. If you want that to be waived, it can be waived under certain circumstances. That one you would have to contact your real estate agent or lender, ask if they provide this kind of service for you guys. And that's typically $500. Prepaid homeowners insurance is based off of a percentage. I don't have the exact percentage, but it's a rough estimate of about $1,250. Escrow fees is 0.14%. So that's $1,400, and that's all part of documentation fees, recording fees, and so much more. There's also a transaction coordinator, which is $500 plus typically. Property inspection, termite repairs, probably. Upfront mortgage insurance, I put that as an X because if you're not going with an FHA loan, then you might not have to face the upfront mortgage insurance premium. And for prepaid daily interest is based off of every loan. So it just depends on what time that you've actually started the effective date of your mortgage. So for example, if it's on the 15th, you're going to have to pay 15 more days worth of insurance. Or prorated taxes, same thing as that. If the taxes aren't due until like 2 more months, then they're going to prorate it so that you pay it up front. Natural hazard disclosure report, typically $90. And this is where I mentioned earlier in the beginning, where the 5 to 6% is intertwined with a broker fee, number 18, which is $60,000. For the homeowners association fee, I didn't put a price specifically for that because I put X to 300 plus. If you're buying a single family home, then the HOA fee won't apply to you, so that X can literally be 0. But if you are buying a condominium, then HOA fee can be anywhere between X to $300 to a whole bunch more. And home warranty policy is about $400 plus. Now, these are just the typical costs. There could be more and there could be less. There could be to be determined costs that were not a part of this example. But basically, for the closing costs for the buyers, it's an estimate of about $70,000 off of a $1 million purchase price. And these are all the things that we're accounting for. I do have a checklist. I do have a PDF if you want to. You could download it, so I'll provide that link at the end. So a little bit of mortgage tips. Basically, I want you to gather your financial information, which is your documents, your W-2s, your government ID, your social security number, have your credit score ready. You don't have to pull your credit yet. Once you go through us first, then we will send you to the lender, and then the lender will pull the credit for you with the application fee. Then once you have all of your documents ready, explore which neighborhood you want to live in. So if you want to live in the 95148 area, 95127, 95116, whatever these areas you want to live at, check them out. Reach out to me if you are interested in a California real estate agent. As for mortgages, I'm not a lender myself, but I do know lenders, and I can refer you to them. And, we'll get you that pre-approval so you can start your house hunting. We will walk into the house, we'll check it out. And then once you find the house that you really love, then we will submit our offer, see if they'll accept it. Just like purchasing anything that's high value with low inventory, there is probably going to be other bidders as well. So we might have to adjust as well and, pay all associated fees that's required. We get to the closing table and then we move in and you finally get your keys. So these are just some tips that we should follow. This is the resource page if you guys want it. Again, this is the link to basically everything that we mentioned today. If you want to have that PDF download, you can either go to that website, hit on the request button. It should be sent out immediately, but if not, then let me know and then I'll just send it to you immediately. So this is the resource for the FHA. Secondary market, I didn't really mention this very much, but it is Fannie Mae. It's a really great resource. And buying tips, I got that from realtor.com because they are one of the biggest websites. So if you guys have any questions, please leave it in the comments or reach out to me directly. If you request the page, all of my contacts will be inside of that PDF. So yeah, if you guys like this content, let me know. Cheers.
Before you guys go, I totally forgot to mention that there is a government assistance program for first-time home buyers. And if you guys are looking for that type of requirement, I could cover that more in depth in a totally different video. But if you guys are looking for something more specific for you guys can reach out to me specifically and I will try to work on your profile just individually, one-on-one. We'll try to get you that house. So if you guys like this video, I will see you guys in the next one. Cheers.